You're an entrepreneur, you own your own business, but you want your own building. How do you come up with that type of financing? How about you work for a company and you'd love to buy it, but where do you go to finance that purchase? What's going to happen if you're tired of working for the man and you're ready to be the man and you want to go out and buy someone else's business? Well, the answer to all three of those questions is called SBA financing. And in today's episode, we're going to dive deep into the basics, the minutia, the details, the tips and the tricks of SBA lending with our special guest. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest. This dude drove up all the way from Boynton Beach, Florida. He is a fellow UCF Knight alum. He, like me, has three first names. He is a SBA Lending extraordinaire. He's a podcast host. He's a YouTube content creator. And the dude crushes it for True Liant Credit Union with running their SBA Lending division. He is my newest friend. He is a subject matter expert in SBA Lending. He is Ray Drew. Ray, welcome to the Loan Officer Podcast.
Thank you for having me.
Were you ready for that one?
I'm impressed.
All right. Thank you. I'm glad I was able to impress you because you're impressive. And I get around people like you sometimes like, ooh, I don't know if this guy's gonna really want to fall in line because he crushes it at what he does. And I'm excited to have you on because this is something that I can be an active learner, but I cannot be the active teacher and the active coach. But I'm sure our audience, who's filled of sales professionals and entrepreneurs, whether they're mortgage or they're real estate or they're outside of mortgage and real estate, we're going to learn today. And I'm pumped for that.
Hey, I'm happy to be the teacher today. Happy to play that part.
Sweet. So we're going to jump right in if you're all right with this.
Let's do it.
All right. An SBA loan for me, as I understand it, you got to keep in mind, I'm a residential dude. I'm not a commercial dude. And SBA lending is a type of commercial loan, correct?
That's right.
So when you think of commercial, you're thinking business. Mm-hmm. And when I think SBA, I think it's probably a government loan or it's backed by the government, only because I know in my industry, FHA, VA, USDA, those are all three loan programs that end in A.
That's right.
And they're all three loan programs that are backed by the U.S. government. So my first question for you is an SBA loan, a loan backed by the U.S. government?
Yeah, it's basically an insurance program where the federal government subsidizes our losses and allows us to make loans to small businesses that we wouldn't otherwise make with terms we wouldn't have otherwise offered.
Yep, and that is exactly what the U.S. government does for residential lending, right? It's not necessarily that you're going to make your payment to SBA because you don't make your payment to VA or FHA, but those departments within the U.S. government are basically providing a liquidity facility that allows credit unions like yours or banks or other lenders to go out and lend at certain terms. And they know, hey, look, if that business owner goes bad on their note and they're not paying Ray and his team on time or at all, that there's a government entity that's going to help subsidize your loss or cover some of your losses, like an insurance policy would help me cover my car accident if I were so unfortunate to get in a car accident.
That's exactly right.
Okay, cool. SBA lending stands for?
Small Business Administration.
Small Business Administration. Awesome. Check. I'm just going right down the line. Check.
Starting right at the beginning.
Check.
Day one.
Yeah. Now, here's where my knowledge base is going to go a little bit sideways or stagnant. I only know SBA lending this way.
Okay.
I own TLOP Entertainment LLC. That's a fact. I own it with John Coleman. John and I want to go out and purchase a building because maybe we need office space for Mark and Nikki, and maybe we need studio that is all ours. And I've always known, well, I could go to an SBA lender, and that SBA lender would help me purchase that particular property as long as I qualify and the property qualifies. And more than likely, it would be with like little money down, meaning I don't need 25 or 30% down. Maybe I only need 0 to 10% down. Is that what SBA lending is, or is that a portion of what SBA lending is? Like, how does that fit into SBA lending in general?
That's a portion of it. If you did want to go buy your own commercial building and you're going to occupy at least 51% with your business, you've got really 3 lending options, and the SBA is 2 of them. One of them is conventional. That's where you're putting 20+% down. Then there's the SBA flagship program, the 7A, and then the 504, which is a little bit of a niche program. They're not great at naming these, but essentially one of them allows you to buy the building with 0% down, one with 10% down, which is obviously less than conventional, which is 20% down.
What are the current terms, like not current terms, typical terms? Like I'm not going to ask you to quote me something, although I have found that commercial lending isn't as highly regulated as like residential. Residential, I would never want to quote an interest rate because of all the disclaimers that I'm going to have to like put out there. But in your world, typically, if I was going to try to buy that building, in this case, it's the TLOP Entertainment LLC, we're going to buy a 3,000 square foot building. Mm-hmm. And I wanted to put no money down. How is that possible? Like, how are you going to qualify me for no money down?
So it's a good question. So with the SBA, we're underwriting the business. It's totally different than residential. I don't know much about residential. I've gotten a couple of residential mortgages, but that's about it.
Yeah. So your residential mortgage, we looked at your credit, your personal income, your personal assets, and we had to make sure that your debt to income ratio was in line, meaning that when I added all your debts with your current housing payment, that those total debts and the housing payment weren't more than like 45 to 55% of your gross monthly income. Like that's a very basic but generalized and accurate way of qualifying someone for residential lending. Commercial lending obviously doesn't work that way.
No, well, you're really underwriting the business, the quantity of cash flow and the quality of cash flow, and then you're just trying to make a reasonable assumption. Do we think this is going to continue in the future? And there might even be some cases where you're buying a building that's a little bit beyond your means, and we're looking at projections and a business plan to say, how are we going to grow the top line to be able to afford this here in the next 12 months? So really, we're looking at the business as a whole, the balance sheet and the P&L. Like if you're getting into SBA, you really have to know that sort of accounting. Shout out UCF for my business degree, which accounting was my hardest class to pass.
Sidebar, my 19-year-old is now is a sophomore at UCF, and he took accounting last year, and he passed. We celebrated. We celebrated that he passed accounting. And it was pretty evident about halfway through the class that he was not going to be majoring in accounting.
No, I like to say I learned it on the streets because you're trying to get deals done and you have to kind of figure it out. But, I look at that balance sheet. That balance sheet tells you how much equity your business has. If you've been building your business for 10 years, you don't have debt because you don't like debt, you're keeping your money in your business and constantly reinvesting, then to me, you have skin in the game for me to be able to leverage all of that equity towards buying a building where you don't need any more money down. Versus if somebody's overly leveraged and it's a newer business and they don't have that equity, they may need, 10% down. So, the 100% financing thing is really, you want to keep it prudent, but it's up to my discretion really. So it's a little bit less regulated in that regards. Now,
wait, up to your discretion, like as the lender at the end of the day, because it's your credit union who's coming up with the funds.
Exactly.
Yeah, but ultimately the loan is backed by the SBA, but you can determine whether or not you want to give me 3% down, 7% down, 0% down.
Yeah. In the main program, the 7A, the rule in the rule book, it says for the equity injection, it says you decide.
Yeah, I would love that. Like for all my residential lenders who are tuning in, like how great would that be to look at someone and be like, hey, look, I can't get an AUS approval at 3.5% down on this FHA loan, but you know what? You go to make it a 4.5% down payment and we'll sign off on this bad boy. Like that would be phenomenal. So using a real life example, if I rolled into you and I'm like, hey, look, we got 20 grand in the bank and I can show you that, we make about $18,000 to $19,000 a year. Are you going to be able to underwrite me to go out and purchase a $500,000 building?
I would need my spreadsheet for that. JC, is he still listening? Can you give me my laptop?
Yeah. No, I mean, I'm serious. Because I don't know this, but I have plenty of friends that own their own businesses, and many of them are small business owners. I mean, is that actually?
Yeah,
I was throwing it out there thinking the answer was gonna be like hell to the no. Like, oh, there's no way. If your taxable income was $19,000 last year and you only have 20 grand in the bank, there's no way I'm going to sign off on a $500,000 purchase of a building.
If you're paying rent, and you're still making 19,000.
Oh, I see where you went with that. Okay. What if you're using your friend's office twice a month for free? then I can see where it's like, yeah, probably not.
Well,
but you don't know, because you're like, I really don't know. I need my spreadsheet.
You got to show me how you're going to repay the debt. And,
Okay.
And if it's not based on your financials, like in that case, then it's projections. And the projections aren't a cure-all. You can't just put together projections and say, hey, look, I can afford this. It's got to make sense. And I've done those. I mean, I did one, for example, of a behavioral health sort of therapy business for children with autism. And they were basically renting out almost the whole bottom floor of this 2-story building. And they just kept expanding because their business was just booming. And they were building out the last little corner in this first floor. And they wanted to buy the building, which included the top floor, which was vacant. And based on their income, it didn't really work. It almost worked, but not quite. But they have a waiting list. They have the ability to grow into the top floor. And so over the next 12 months, we're projecting you are going to grow the top line and be able to afford it. And we're going to build in enough sort of capital to make sure you have that runway to get there. So you get to use a lot of creativity in SBA lending.
Dude, I love that. Like, I mean, literally, my brain was going 100 miles an hour, because you do have businesses, and maybe I run one that's like this. It's like, look, a year ago, we were at $7,000 a month in recurring revenue. And then 6 months ago, we were at $13,000 a month in recurring revenue. Now we're at $19,000 a month in recurring revenue. And you're saying, hey, look, we could potentially structure debt to help you purchase this building, where we see where your income is growing through a cash workflow analysis. And, you know, if we can underwrite it appropriately, you could qualify, even if you only showed $19,000 last year in taxable income, and you only have $20,000 in the bank today. Because if it makes sense, this is what I've always loved about commercial lending, by the way, y'all do make sense lending. Exactly. If it makes sense, you're probably going to sign off on it.
100% right.
Okay. Now, on an SBA loan, do I have to personally guarantee it?
Yeah. Anyone who owns 20% or more
has to personally guarantee.
Yeah.
And is that normal in all commercial lending?
Yes.
It is.
Yeah.
So anyone who's going out there, like, I want to go out and start my own contractor business, and I need a dump truck, and I need an excavator, and so I'm going to ask you for money for that. You're going to make me personally guarantee the loan.
Small business owners sign up for a ton of risk. They are all in on pretty much everything they do, including the lease. A lot of landlords are wanting you to PG your lease. Where you find some non-recourse debt is more in the investment real estate side, which I don't get involved in.
Okay.
Obviously.
So my understanding of SBA lending was to purchase real estate, commercial real estate, for my business.
It's a part of it.
What? How much? Half?
I would say probably 20%.
Wow. So
Yeah.
20%. What? So then walk us through. Let's make this a little educational content. Walk us through what are 2 other ways that people can use SBA lending to become successful entrepreneurs, successful business owners?
Well, let's round out the real estate conversation.
Okay.
So we're thinking about the industrial warehouse, the office, the retail building. That's what we call multi-use real estate. Think about car washes, gas stations, hotels, assisted living facilities, marinas, golf courses.
Marinas. You know, this is one of my. I have 2 things I want to do. Sorry, y'all, you have to deal with me for a second. There's 2 things I want to do in what I call like the 4th quarter of my career. You know, I'm going to run hard for 10 years, mortgage, lower all the way, you know, top 5 lender, 5 years, take it public. Awesome. Right? Do that. But in a decade, I'll be 55. And I'm stuck between move to DC and advocate for my industry, because I would love to lobby on Capitol Hill. I think that'd be really fun.
Okay.
But my second part is own a marina.
Okay.
And just because I love boats, I love fishing, I would love to have like that tiki bar and that bait shop. And, you know, I'm a very social person. So I would love to have people coming and going day in, day out. Like, I don't really want to work the marina. I want to own the marina. I think I just want to drink and hang out with people who go boating and fishing all day. And if I make money, great. I don't want to lose money, but I want something to keep me busy. So I'm happy to know that I could potentially leverage an SBA loan for buying a marina. Is there any like maximum loan amount?
Yeah. With the 7A, which is the main program that I'm usually talking about, it's $5 million.
Okay. All right. So sorry, I took you down a rabbit hole. let me circle back. Let me dig out of that hole a little bit. And you were talking about the various ways or various real estate you can buy with a SBA loan.
Yes.
Okay.
And
you said marina, then I went like, oh, squirrel, shiny object, and I started chasing it. So where were you going with that thought for us?
Well, so you can use SBA loans to buy these. These are basically pieces of real estate that are a business, or you can think of it as a business that is real estate. It's kind of, and so this SBA product is essentially the main way most people finance those types of purchases, even construction, and then this other chunk of the SBA world, which is my favorite, is the business acquisition world.
Acquisition meaning I want to buy
M&A.
Your company from you.
Buying a business.
John Coleman owns a dry cleaning business with 3 locations, and I want that dry cleaning business.
Yes, buy the business. Also buy out your partners. But this is all change of ownership transactions, and the SBA is really the only game in town when it comes to financing it in the, call it $1 to $6 million sort of space.
Could I get an SBA loan for TLOP?
To do what?
Grow, expand, market, advertise.
You can.
Can I really?
Yeah.
Can we talk about that offline?
Sure.
Okay. Yeah, I have like big goals, but I'm tired of bootstrapping this. I've been bootstrapping this for 4 years. That, I know what we have. If I could put some juice behind it, maybe hire some key people.
Yeah. I'm doing that for one guy right now who basically came up through health insurance and, had a brokerage with a partner, kind of exited from that. It went into this other sort of niche within the healthcare. And we're doing a loan for him for about $1 million, I think. And it's mostly to hire people, market, and software, to implement software.
Okay. So you're going back on your favorite is acquisitions.
Yes.
Walk us through, what does that look like? What does an acquisition look like? You mentioned, like, I made the joke I could go buy John Coleman's 3 dry cleaners, which he doesn't own 3 dry cleaners, but what if he did? And or you said you could buy out your partner. Mm-hmm. What are some, like, what does that look like? And what are you seeing? Like, because you are a practitioner, right? And I use this in your intro, but people should know this about Ray Drew. Like, he has his own podcast. Like people, men and women who do SBA lending for a living, which, what do you call them again? BDOs?
The loan officer sort of title in our world for there's probably like 10, like there's a few with you, but we have like 10, but business development officer or BDO
is the most popular. Yeah. So we call ourselves MLOs, mortgage loan originators. You call yourselves BDOs, business development officers. But like you have your own legit podcast that's like the most popular one amongst BDOs throughout the country, right? What's the name of that?
The Art of SBA Lending?
The Art of SBA Lending. That's Spotify, Apple, and YouTube? Mm-hmm. Okay. But you also have your own YouTube channel.
SBA Ray.
SBA Ray. And that is for anyone tuning in that thinks, hey, I may want an SBA loan. Mm-hmm. Right? That content is curated specifically for those of us like me who's thinking, man, I may want an SBA loan. But if you're a BDO or you're thinking about a career in BDO, like if you want to become an SBA lender yourself, then your podcast is more the jam for the industry professional. 100%. It's like insiders talking to insiders.
Exactly.
Okay. Very cool. So back on why is the acquisition your most favorite?
Well, first of all, not everyone knows about it. It's becoming a lot more known with, social media and podcasts and all of these communities and even some gurus talking about it. But when you drive down the street, you see the real estate, but you don't know that, this unmarked warehouse has a HVAC business doing $1 million of EBITDA. And you don't know that you can sell that business a lot of the times. Well, when sellers retire, they don't shut down the business. They sell the business and they sell it for a multiple of their cash flow. Then on the other end, you have buyers coming from all sorts of walks of life. I've have buyers that got laid off of tech in the last year. I've got buyers that just want to exit corporate America. You've got buyers coming out of MBA programs that want to buy a business like a, private equity type of situation. And the SBA 7A program is the only game in town to finance these because they don't have collateral. So you're essentially just putting 80-90% leverage on a business based on the cash flow it's throwing off. And that's how it works.
Okay, so first and foremost, so EBITDA, for those that are tuning in for the first time and you're looking to learn, earnings before interest, taxes, and amortization, right?
And depreciation, yeah.
And appreciation or depreciation, yeah. EBITDA. I forgot the D.
Yeah.
Depreciation and amortization, right?
Exactly.
Yep. So it's a technical term. It's an accounting term, is it not? Like a finance term.
Yeah, it's accounting, exactly.
Yep.
It just means it's the cash flow from the business.
Yep. And then when you're trying to buy a business, you typically will, or you're trying to sell a business, you're going to sell based on X multiple of your EBITDA. So I'm going to sell my company. In my industry, it's average to get 3.5X or 3.5 times your EBITDA. If your EBITDA, in this case, the HVAC in the warehouse was $1 million, then I'm going to look to sell my company for $3.5 million. And that's probably the most basic way that it was explained to me and how I try to explain it to someone who's learning for the first time on what it means. What I love about what you just shared that I was today years old when I learned about is like I have a neighbor of mine, MBA grad, probably in his early 40s. He's kind of getting worn out with corporate America because he's been working for the man, making the man millions of dollars a year. And he feels like he hit a ceiling. And all of a sudden he's like, you know what? I'm done with this. He goes, I'm going to go out on my own. And his jam is to go around the Sun Belt, the Southeast. And he's looking for businesses that have been in business for 10 to 30 years that is typically owned by what we call mom and pop, right? Husband and wife own their own business, maybe have 8 to 18 employees, and they're good businesses, whether it's plumbing repair, appliance repair, flooring companies, garbage removal, etc. And his goal isn't to actually run any one of those businesses. He wants to own 5 to 7 of them as a like a venture capitalist would, right? A venture capitalist would do that, or a hedge fund would do that.
Yeah, like a private equity
Equity, PE. Yeah, that's where I was trying to go. So a private equity firm would potentially do that. And Louis like, yeah, I can do that. Like I have the chops, I have the experience, I have the MBA. He would then look to potentially leverage SBA lending.
Exactly.
Or because I know Louis, and we talk about this, he's also looking at ways to do seller financing.
Well, that's much better if you can get it.
Yes. Yeah, you can't always get it.
Yeah.
But then for those that are tuning in and thinking, wait a minute, why would he be doing that? Imagine this. Imagine you go out and you purchase 5 companies on average for, let's say, $150 million a piece. So you're $7.5 million into owning these companies. You keep the managers in place. You keep the employees in place. You add value, whether it's upgrading equipment, upgrading technology, upgrading systems and processes, do some marketing, some advertising, maybe even increase the average ticket, increase the sales. Now those companies aren't worth $1.5 million a piece. They're worth maybe $2.5 million a piece. And after 5 years, he may turn around and want to sell his 5 companies. But what did he just do? He just made $1 million on 5 companies, which means he made $5 million in 5 years. And oh, by the way, those companies, let's say 5 of the 7 were profitable. And each month or each year they were profitable by $60,000. He was making $300K a year. So Louis is like, dude, I was making $180 with my MBA and my corporate job. I went out, leveraged SBA lending. Maybe he got lucky and got some seller financing on some of those transactions, but he made $300,000 a year. But more importantly, after 5 years, he sold all 7 companies and cashed out $5 million.
Well, and the even crazier part is if you bought, let's say, multiple companies within the same industry and you just combine all of the cash flow they're all throwing off, when you get to an upper echelon where now all your companies make, let's say, $3 million of cash flow, the multiples increase.
Oh, wow. Yeah. So SBA lending, more than just helping mom and pop purchase the building that they operate their business out of, which is what until today I was thinking it was. I mean, SBA lending is a great way to help that person who maybe views themselves as a serial entrepreneur who wants to have their own mini version of private equity, and they want to potentially go out and purchase these businesses. Here's where I love SBA lending now that I'm getting to know you even better. Think of all the guys and girls who are currently in college, right? And they're going to be coming out in the next few years. And maybe let's say the job market's not going to be robust. And there's not going to be a whole lot of great jobs out there. But there's a lot of great businesses that are owned by people in their late 50s, early 60s. And those people want someone to sell to because that's their nest egg. They want to be done working, but their nest egg is their business. Instead of going and working for corporate America, these 24 and 26-year-olds with maybe a little bit of job experience, you want to get some some of that wetness behind your ears dried out and some real world experience. But one of their plays may very well be go in business for yourself, but don't start something from scratch. Take something else, take something that's previously existing over, especially if it's in an industry where people are going to need your service, i.e. what I threw out earlier, appliance repair,
Recession-proof.
landscape. Yeah, recession proof. Perfect. Dude, I love that. What else are we missing out as it pertains to this acquisition? What are some other things that your clients are coming to you for to help them acquire businesses, or are we touching on it all?
Well, we should say, and by the way, I love that you said that, because when you're in college, you don't really know what you want to do. Like, this path is possible, and that this program, which no other country in the world has, except I think maybe Australia has something similar. People from the UK are like, I cannot believe you have this. It's insane. And so it's literally a path where you can, I mean, I did a deal in California about a month ago for a 25-year-old to buy a business for $5 million who started out door knocking, selling solar.
Wow.
And he built up he was one of these sales guys that just had like the highest conversion rates.
Mm-hmm.
He built teams. He then built his own business, scaled it up. And, it was like a business was doing like $1 million of revenue and a 20% bottom line. And you're doing great as a 24, 25-year-old. But then the power, the 7A product was able to unleash for him, and then buy a business, do a 1.5 million of net. And he put down 2.5% on that.
Oh. Wait a minute. So 2.5%, what was the purchase price? $5 million?
Mm-hmm.
Okay. So if I'm doing my math right on that, about $150,000 he put down.
Yeah,
is that right?
Exactly.
Yeah. So $150,000 down. He buys a business for $5 million. That's spitting off $1.5 million.
Yeah. He made his money back in like 4 months.
Wow.
Now
what was the business?
Solar.
Oh, so he knew solar. He had been selling solar.
Yes. That's why we did that. If you don't know, you're those people mostly putting 10% down. Like, if you have general business management experience and you're buying a business in an industry you don't know nothing about, like, I don't want to understate the risk. Like, you're personally guaranteeing loans to buy living, breathing things. So you don't need the direct industry experience. If you're buying a plumbing company, you don't need know how to fix the toilet, but you do need management experience.
Okay.
And in those cases, it's a 10% equity injection.
Okay, so the least experience you have, the more money down.
Kind of, yeah.
Yeah, where in my world, like, the lower your credit score, the more money you have to put down.
Exactly.
But it all comes down to risk, right? The higher the risk, the more skin in the game. The 100%. Lower the risk, the more the least skin in the game. Mm-hmm. All right, what's the third way? So we've talked about the two of the more popular ways to leverage SBA lending. What's the third? If you say these are the top three, what's the third?
So startup is actually a popular, especially with the franchise, a popular use of the SBA program. So it's interesting you're talking about like how much money the business is making, and I truly do love cash flow. I have a neon sign in my office like this that says cash flow is king. So I underwrite cash flow, but the SBA does allow you to get an SBA loan to start a business. I think startups are a little risky personally, so I don't do a ton of these. But if it's a franchise, like the Orange Theories of the world, and BurgerFi's, whatever, Crumble, these are franchises that are getting started by franchisees who are buying into a concept, getting the playbook, investing in that initial investment, and they're doing that with SBA financing. So that is another tool that is used for the SBA, or the SBA can be used to finance those startups. And I've done a few of those as well, both independent and on the franchise space.
I had a buddy of mine, I remember this was about 10 years ago now, and he was in the pest control company, right? So the people come out and spray our lawns and come in our house and spray for like cockroaches and stuff. Like back when we were kids, it was like Orkin was like one of the big ones. And, he had started on a truck, then he worked his way into running a branch, and he wanted to go start his own company. And he found it was a little bit difficult to obtain financing. And it was that because someone like that, where you're like, hey, look, there's not a business that you're purchasing. So he is a quote unquote startup.
Right.
He could have maybe come to you. He could have obtained an SBA loan, but only for X amount of dollars. And that money would have had to been tied to assets, or would he just not, SBA wouldn't have been a good fit for him?
Well, so if you're starting up like that, you're kind of in bootstrap mode. I mean, you basically need a truck and
Some
the
advertising.
chemicals.
Yep.
Yeah. Not even. I mean, and I would be mailing flyers, you know,
Okay.
to houses or something. Like you don't
Door knocking.
I don't believe in putting debt on that type of startup. I like putting debt on things that you actually need to put debt on. Like if you're building out an Orange Theory Fitness, it's going to cost $700,000, right? So you need to finance that. I did a startup brewery. It was everyone has wanting to start up breweries, the last like 5-10 years. Well, this was the master brewer of like a big company wanting to start. So I was like, yeah, I'll bet on this horse.
Yep.
So
At that point, you bet on the jockey, right? Because you're like, hey, I don't have a horse. I'm gonna finance your horse, but I'm betting on you that you know how to train and ride horses.
Yeah, true. So he bought a building. You have to make a tap house. You have to get all the equipment. So that was a $2.5 million project, and they put down 15% on that one.
Okay.
Usually 10 to 20% on a startup because it is a little bit more risky. So you're putting in a little bit more of your own cash.
Yeah. So SBA Lending, if I were to try to summarize it, and from my own layperson understanding, it's obviously the easy one is to purchase real estate when you're already an existing business. Purchase a business from somebody else where the business is already an existing business. And I can use it for a startup. It's going to be harder. It's going to require me to actually put more skin in the game. And you're going to want to see that I know what I'm doing, that I have experience, and more importantly, that money's going towards something that really can't be bootstrapped, which is your terminology. And that was really what prevented my buddy from doing it. And I remember trying to give him, friend advice. I don't know that space well enough, and I sure as heck didn't know it a decade ago. I probably know it a lot better today, but I tried to tell him, and this is going to be a question to you to make sure I wasn't giving him bad, friendly advice. I said, hey, let's just say his name is Marty. All right. Marty McFly. All right, Marty McFly. I said, you may be able to go to a bank, and the bank may be able to help you buy your equipment. They may be able to help you buy your chemicals. Mm-hmm. But he's like, yeah, but I need my salary for 6 months. And I was like, bro, I don't think entrepreneurship operates that way. Like, you'll get your salary when you're profitable. And it's called a distribution. It's not even called a salary. Is that still the case? Like when someone's trying to start their own business, I mean, you just said to me the term you use, bootstrap. And bootstrap is what I've done for TLOP, right? I use my own money in order to buy this equipment, in order to fly John and I across the country, to build a website, right? I bootstrapped it. Even the salaries I paid to Mark and Nikki, bootstrapped. Mm-hmm. Now, today, we have a coaching program and a coaching company, and that generates enough revenue that it tends to cover most months Mark and Nikki's salary and any investment we need to make into technology and equipment. But early on, I bootstrapped it. My buddy who was starting his own landscape/pest control company, he's going to have to bootstrap it. And is he going to be able to get money for his salary? That's my real question.
That's a definite no. I would really ask, like, why are you doing this at that point?
Okay.
You need the fire in the belly if you're going to be an entrepreneur, and you need to prove out your business, and you can't just put debt on it before it's proven. Like that's the risky part. Like in some of these franchise situations, they're somewhat proven models. You can look at the pool of data that, shows there's 100 stores open. They have a 98% success rate, and they even give you some financial representation so you can kind of build your own pro forma out and put debt that can be supported by those numbers. If you're a guy in a truck type of business, you don't really need the debt. The debt's going to burden you. And if you need that salary for 6 months, it's probably not the time to start a business.
Yeah. I like that answer. I mean, and it makes so much perfect sense. It's like the fire in the belly. If you need this, then you're not ready, right? If you need your salary for 6 or 12 months, you're not ready.
Right.
And your bigger one, it's like, is the concept proven? Because you're only, just like we in the residential side, we only want to lend people money who we're confident are going to pay us back.
Mm-hmm. Yeah.
Right? We're banking on less than 3% don't pay us back. And those people, we take their properties back. Like on your end, it may be more difficult to take someone's business back, or when you do take it, I don't know if there's anything worth reselling. How often does that happen, out of curiosity? How often do you have to, my term is called foreclose, but how often do you have to foreclose on a business?
Well, yeah, there's usually not much there, but the default rate for the SBA is also under 3%. In those cases, there's just not much in there. I mean, we could finance a building and you liquidate the building. That's the same. Sometimes there's some equipment. You're getting pennies on the dollar. But then you also have that 75% guarantee. So once we liquidate everything, then that's when we call up the government and try to get a check.
Yeah. Yeah. You're filing your claim.
Yeah.
At that standpoint. And then whatever the loss is you had the person who took out the loan had a personal guarantee on it. However, I mean, if their business has been run to the ground, they're probably close to personal bankruptcy. And my assumption would be at that point, they're including whatever deficit they owe you, the credit union or the bank, that's going to be included in their personal bankruptcy.
Yeah, exactly.
Yeah. I mean, it happens, but luckily it happens less than 3% of the time.
Yeah, exactly. It's a very considering the risk, sort of potential risk out there for these small business loans. That's a pretty good track record.
I think it's a fantastic track record. I like knowing that this liquidity facility exists, especially knowing that it exists in those three facets. The franchise is a huge one because franchise is a fantastic way to start your own business because you're basically buying business in a box. You're paying a premium for that business in a box, but you're also paying for something that's proven, which is why you're able to go get financing on it because you as the bank or the credit union or the lender is like, yeah, that's a proven concept. I will be willing to invest in that. Whereas the other one's like, hey, that's a good idea and I'm sure you're a hard worker, but there's nothing proven. You can't document cash flow. You can't show me how many clients you have, at which point you're like, check back with me in a year or two. And if you have some numbers there and you have a good idea with a concept that's been proven, I can maybe help you finance your next iteration or your next investment or your next jump.
Yeah.
Is there anything else that we missed out on, Ray, as it pertains to truly understanding at a very high level the basics of SBA lending?
No, it's just there. It's really a job creation program at its heart. The government put it there. The program's been around since the 50s, and it's there to create and retain jobs for the local economies, and it's doing that by allowing these small businesses to basically have access to capital that they may not otherwise have, and typically longer terms, lower equity requirements, and it's one of the few things working out of Washington, I would say.
If people want to get a hold of you, how do they do that?
So you
can follow you, hook them up with the podcast again, hook them up with the YouTube channel, and then obviously your contact information. And I'm assuming, do you lend in all 50 states?
I lend in all 50 states. I'm on YouTube, SBA Ray. You can find me on LinkedIn, Ray Drew. And
that's RAYDREW. Super easy. Can't screw it up.
Yes. Those would be the two best places to find me.
Awesome. Ray, thank you so much for taking the time. This dude drove all the way up from South Florida to Central Florida in order to come on and drop some serious knowledge for us. I'm so appreciative. I can't wait to continue to collaborate and bring you back on later down the road to talk more about helping our entrepreneurs and our small business owners in terms of how they can leverage and level up their business. But for now, this is all the time that we have. So he's Ray Drew. I'm Dustin O, and you've just tuned in to the Loan Officer Podcast. That's all the time we have for you today, but we do look forward to catching you on the next episode. Peace.